Tim Stone looking jacked.
Appreciate it.
Well, thank you, sir, for being here. I appreciate this.
I'm excited. I love the setup. It's a beautiful cityscape of Atlanta over there.
It's an interesting little spot, but probably the youngest man buying real estate in Atlanta, one of them.
Quite possibly.
How old were you when you started buying stuff?
When I started trying, probably 16. It was like the first one I bought, I was 20.
Okay.
Yeah.
What does trying to buy real estate at 16 look like?
I went to the bank and was trying to get a mortgage.
That's
literally
awesome.
went to the bank that I had my checking account at, trying to get a mortgage, and they were like, "No."
They're like, you
I don't even
just
have a-
learned how to drive. Like,
Not old enough to have a credit card or anything.
that's so
And then
badass.
I remember I was looking at Zillow things. So I grew up in Blue Ridge, Georgia.
Mhm.
It's like huge vacation rental market. So I was looking at houses and cabins and stuff, things that would make sense on Airbnb. And I wish I would have figured out how to buy all of them, because the things in Blue Ridge like went up 5x since,
Oh my God. I was about to say that, what, 8 years ago? 7? Yeah.
I guess I can't do math on camera, but
I have 10 fingers, so I can
Yeah.
count that. That's about the only reason I can.
I mean, cabins were like $100,000, $80,000 3-bed, 2-bath back then, and now they'll go for like $400,000 or $500,000. It's come down a little bit, but like during COVID, people were paying insane prices because all the short-term rental stuff was huge on the internet, and like people were sharing information. Hey, this is a good market. People are visiting. It's 2 hours from Atlanta, so a big thing is you could be at work on Friday and say, "Hey, let's go to the mountains." Book something Friday and be there in 2 hours.
Yeah.
So it was like even last minute stuff. So it was funny. So my dad was in the short-term business.
Yeah.
And first he was managing cabins. Then he sold the company and bought some of his own cabins. But what he would do is, and he found it just looking at the data, is that most people were booking last minute.
Okay.
But you would think if you have a vacancy, you're going to try to just lower the price, make sure it's filled, make sure it doesn't sit empty.
Mhm.
But most people aren't even looking till last minute. So he wouldn't do that. He would sometimes even raise the price like on a Thursday if it was empty for the weekend, because people in Atlanta like aren't even going to start looking till Thursday.
I was about to say, it's like
Yeah.
you're probably not planning that far out of like, oh, we're going to take a cabin weekend in 6 weeks. Like,
Exactly. And some people do, of course, but like the smaller stuff, like if you have a 2-bedroom cabin, like you could just, hey, let's just go to the mountains for the weekend.
screw it. Why not?
Yeah,
Like,
why
okay,
not?
just get out of work at 3 instead of 5 and let's head up there. That's
Yeah.
awesome.
Yeah. So I was trying to figure that out. I wish I did, but I didn't figure it out back then. Then I moved to Chattanooga, Tennessee for school, and I thought I wanted to be a real estate agent, but I'm glad I didn't do that. But I was like,
Good choice.
exactly. I was just gonna get my real estate license when I graduated high school, and then just sell real estate in Blue Ridge. But ended up going to college, which I'm glad I went, but I did eventually drop out, and I'm really glad I dropped out.
Yeah.
But got involved in the real estate club that they had just started at UTC. Started meeting people who were investing in real estate, because I read Rich Dad Poor Dad back when I was like 15, 16, and that's why I was super interested in it, trying to figure out how to make it work, like how to get some assets and some passive income. So meeting people who were like doing deals in Chattanooga was huge for me, because you can read the book Rich Dad Poor Dad, but it's like he's talking about stuff he did 40 years ago.
Yeah.
And it just didn't relate. But then it was like this guy, I remember like specific deal, and the numbers are somewhat accurate. But he bought a house like 3 miles from campus for $45K, and then put $35K into it, and then it appraised at like $195, and he refinanced, got all his money out plus some, and kept the house. And I was like, what?
Like,
And
this
then-
is magic.
And then he told me he didn't have the money to buy it or do the rehab. He borrowed money from someone else to do it, paid them back. They got interest on their money, so they got a good return. He still kept money in the house, and then it cash flowed. So that was a game changer. It was like, okay, this guy did it with no money 3 miles from me last week, instead of, whatever hypothetical scenario in the 80s. Like, this is happening now.
Yeah.
So then I started taking investors out to lunch, like started learning about how it works with other people's money, learned about seller financing. Just that was back when interest rates were super low. You didn't have to do that stuff. Like, stuff would just sell for top dollar because debt was super cheap. And then it was just networking, trying to figure out how to make it work, and eventually found people I could work with. And we were just looking at deals all the time. I put a couple deals under contract the first week. I really decided, like, we're going to do this. I'm so glad I didn't buy them.
Why?
They probably would have made money, like, just because of what the market did, but it was like this 5 unit in like the worst place of Chattanooga. They wanted 250,000 for it, which was like a pretty good price for 5 rentals.
Yeah, that's not bad at all.
And then I offered them 200, and they said yes, and just signed it for 200.
Oh my God.
So they're like, okay. So then we go see the units and everything, and I was like, oh, nah, maybe we don't want to do this.
Maybe this is why they're taking 40 grand a door. Interesting.
Maybe, yeah. So we did end up backing out of that and kept our earnest money.
Okay.
So the one thing is like when you lose earnest money on a deal, just call that your tuition. Like you learn the lesson, and it just costs you some money. And then that same broker brought me another deal that's off market. I think it was either 12 or 16 units. I was like, oh, the cash flow is amazing. We put it under contract, start doing the due diligence, and it was weekly rentals. So that makes it a little trickier for the financing. And then we were going to raise money from investors. They didn't really like that.
Wait,
so we backed out of that.
Weekly rentals on a 16 unit.
Mm-hmm.
Okay. That's a whole other
Yeah,
discussion.
It's just a different asset class. I mean, most of the people stay there for like years, but they just have a week-to-week lease, and that's how they do it.
I've
a lot
never
of them
even
pay
heard of
cash.
that.
It's like they get their paycheck on Friday, they pay their rent immediately. Whatever's left over, they, buy food and whatever.
Spending money.
Yeah, spend their money.
It's different than like an extended stay essentially, but I mean, relatively similar business model, but it's not like a Best Western branded or like Red Door Inn, whatever the hell.
No, it was like a couple quadplexes, just all in the same area.
That's wild.
Yeah.
So the guy that you met that did the 45,000, well, the 70,000 all in, how much do you know how much money he put down? Was it hard money? Like, do you know any of the specifics on that?
I don't know the specific. I think it was all cash. Like
Okay.
he borrowed like $75,000 or $80,000 cash from someone.
Gotcha.
Did it? Mm-hmm.
Still, that's crazy.
Mm-hmm.
So you start looking around, put a couple deals under contract.
Yeah, and then we ended up getting a 48 unit apartment complex in Chattanooga.
Your first one.
That was the first deal, and we closed on it. And I went to the title office and picked up a bucket full of keys. Like it was a bucket full of keys, and I was a property manager, and I was in charge now.
At 20 years old, they're like, congrats, kid. Here you go.
Yeah,
Go figure it out.
It was a month after my 20th birthday.
That's badass. Okay.
Yeah.
Walk me through that.
And then it's like, okay, well, now I got to figure out what to do. And also I had COVID during the due diligence, so I didn't really know much about the deal personally. So I just had to like figure out to get a hold of all the leases, like who still has a current lease, who is month to month, like what do the units look like. So we went and, changed the air filters, introduced ourselves to all the tenants. And there were, I think, 11 vacancies or maybe 13 vacancies. So we tackled those first. I was in there ripping out carpets, painting the walls, like
doing everything,
cleaning the stove, all that stuff. And we ended up getting those ones filled, like put them on the market for rentals, got them filled, kind of figure out what market rent was, and then started working on some of the other units. And we actually sold it like 14 months after we bought it.
Okay. Flip, get everything
kind
up
of
and
just
running.
stabilized it, put people on long-term leases, and then there was still room. We didn't raise the rent all the way to market rent. There was still room for someone to make money that bought it, but it was like kind of got in and out, made our money, went on to some other deals. And
okay. Did you finance that through the bank or did you do that
through the bank?
creatively?
It was like 3.5% interest back then.
Yeah. Oh, so you bought it like right what? Oh, I guess that was like right in 2020.
December 2020, I think it was.
Oh yeah, hell yeah. Okay.
Yeah. And then sold it at the perfect time too. It was like February 2022.
Nice.
So
good timing.
Good timing.
Very good
interest
timing.
rates went up right after. So it was good for the guy that bought it. It was good for us. And then before we sold that, we got 45 units. So at one point in time, I'm managing 93 apartments.
Self-managing 93 apartments.
Yeah.
How chaotic is that?
I ended up dropping out of school. So it was
Good problem to have.
Yeah, good problem to have. It was a little chaotic, and I eventually, and it was a very good decision, hired a third-party property management company to just take that off my plate. Because I was doing the work every day, but I wasn't the greatest property manager in the world. Like people who do that for a living are probably better at it than me. And it's funny, like they're a pretty expensive management company. We paid them 10% of the rent.
Okay.
But they increased the rent by like 30% or something like that. So it was like they paid for themselves.
That works out.
So totally worked out. And then you kind of just manage the management company, like things that they could be doing. They've got a whole team, maintenance people. They've got property managers, account man, all that. So you just kind of make sure that they're doing their pieces, but they have the bandwidth to handle it all.
And it's not just one man
and
running
it's not
around.
Just me. Yeah.
Well, any nightmare stories? Any fun stories from managing 93 units by yourself?
Yeah, there's a few, and probably the one that it wasn't that crazy, but it was literally 3 days into it. So I moved into the first property that we bought.
Okay.
So moved into one of the empty units and was like on-site management. And 2 or 3 nights after I had moved in there, and I didn't really know the area or any of that stuff, one of the tenants, it was a street of duplexes. Just
Okay.
To paint the picture, so it was the duplex across the street and one up. Like I hear yelling and fighting, people banging on their door, like, and then I hear a window smash, and she comes out front yelling and shoots 3 bullets into the sidewalk.
Jesus Christ.
Yeah,
Into the sidewalk, just
yeah,
like
just
ricocheting
into
off.
the sidewalk. I didn't know where she shot it. I wasn't like watching, but I heard gunshots, and then like the phone calls start coming in from the neighbors and stuff. I'm like, yeah, I'm already on the phone with the police. They're coming. So then the police come, and she's like, no, nothing happened. There's no one here. Like completely like yelling at the police, like making a huge scene. And then they're like, we just got to come in and make sure no one's dead. And they came in and didn't do anything. Didn't ever have an issue after that, but
That's
with that particular tenant. But
do you know what happened with it?
it was some drug deal related thing. I don't know, but nobody got shot, and it never happened again.
Firing warning shots into the sidewalk. It's
Yeah,
hilarious.
I don't know.
It's like,
I don't know. I don't know
you
the
shoot
whole,
those up in the air? No? Okay, just bounce them off the sidewalk.
I don't know the whole story, but no one got hurt, so the police didn't do anything about it.
That's all that matters.
Yeah.
So you bought the 46, you said?
It was 48, and then we got another 45 before we sold the first 48.
Okay.
Mm-hmm.
And then I know that you guys do a decent bit in like the creative financing way. So like what was not the barrier, but what was like the timeline? So the first one you did with the bank, the second one you did with the bank as well?
With the bank as well.
Okay.
Yeah.
How many did you do through the bank? Like, can you walk me through a little bit about like how you went through getting the funding? Because that's something that I hear all the time.
So that was, I didn't have really anything to do with that. The guys I was working with had the credit and the, all the everything with the bank. And then I was just there to do the heavy lifting and the grunt work, basically. That was my cut. So I actually didn't really have anything to do that. But
still.
So then I made a little bit of money and went to do my first deal by myself, and I bought a duplex, which turned out to be a really good deal, but I was going to keep it forever. That was my plan.
Yeah.
Like I just went through the bank, same thing. I think rates came up a little bit. Like my rate was probably 5 or 5.5%.
Okay.
So it wasn't terrible. I think my payment was $1,100, and then I got both sides rented for $1,200 a month.
Oh, hell yeah.
Yeah. So it was bringing in $2,400. My payment was $1,100. So it was a pretty sweet deal. I was like, yeah, I'm just going to keep this thing forever. And the thing is, I bought it for $195,000, and it went through the bank. So they did an appraisal and everything. It appraised at $285,000. So when I bought it, I had $90K in equity.
That's a fun little
bow
on top.
Yeah, that doesn't suck. So
That doesn't suck. Just having 90 grand appear out of thin air. Kind of cool.
So, but my mentality was like, this is a long-term hold. I'm going to keep it forever. Like my kids are going to inherit this thing, whatever. And then, I was just having a conversation with another investor. She was selling all her single families and duplexes and stuff because she had a change in perspective. One of her single family rentals had like a sewer line bust in the yard or something. And it was like a huge mess. It was on the side of the street where she had to pay for it, and it was like all over the yard, had to do environmental inspections and all this. And I think the tenants had to move out. They'd like pay for them to go somewhere.
Oh my God.
So stuff like that could or like air conditioner stuff like that could very easily cost $20,000, $30,000, $40,000. And if you're only making, now mine was cash flowing pretty well, but just say on average, so you're cash flowing $300-$400 on a rental.
Yeah, you're underwater.
Yeah, if you lose $30K, you're out for years, like 10 years.
You're toast.
Yeah. So after I had that conversation with her, I immediately called my real estate agent. We put it on the market.
Oh my gosh, you're like, to hell with this. Get me out.
And then he sold it for it was like $283.
Oh,
so I just got out of it, and then I took that money and put it into some fix and flips that were also a nightmare.
How so? You don't like the fix and flip game?
Well, it was quite a while ago, and I've not got my money back yet.
Yeah?
Yeah.
Okay.
The house isn't done yet.
Really?
Yeah.
What happened?
It is huge mess with contractors. Like they were working on a lot of other projects, and this is a good lesson for anyone that's fix and flipping is being on top of your contractors.
Yeah.
Because they got paid a certain portion up front to start doing the work, pay their guys, do everything, but they didn't manage their funds because they're most of the time not a very sophisticated business owner.
100%.
So they didn't manage their funds very well, ran out of money, but they'd been paid to do, let's just say 30% of the work, did 10% of it, but now they don't have any money. So they can't pay their guys to keep working, but we can't pay them to do work they haven't done yet. So it's like,
and they just
and they just had so many other projects, and like it was Man, we were expecting to be out of that deal like October 2023, and it's
Yeah.
February 15th, 2024 now.
Yeah.
So, it is what it is. That's the real estate game, but
You see that's
it
one of the
happens.
things that I have like a gripe with in real estate online is like, again, buddies will send me stuff just because like I'm one of the few guys that like the school, whatever, that's in real estate. They're like, oh, is this legit? Is this legit? Is this legit? And like to some extent, yeah, it is. But also every single person online just glosses over like the shit sandwich that you're going to have to eat on half of these things where it's like, yeah, it sounds great. And it is great when everything goes to plan. But there's this whole other component of like, well, yeah, this guy was supposed to do this, this, and this. He screwed this up, caused this amount of damage. Oh yeah, then all the copper got stolen out of my HVAC unit. Like that happened to me last week, 2 weeks ago now, in Birmingham.
Yep,
There
doesn't surprise me.
supposed to be a cage on it, and then the cage was gone, and so was everything inside of the HVAC unit.
And stuff like that happen. You just got to have a stomach for risk. Like, I mean, you could also buy a duplex, and I did nothing to it, and I made $90,000.
That's just a game.
I did nothing. I didn't even drive by it after I bought it.
Yeah.
And then like I sent him the pictures I took the first time I walked through it, and like he used those pictures for the listing. The buyer came through, saw it, verified it looked the same, closed on it. I didn't even drive by the place.
Yeah.
Like that's a home run deal. But then, you move the money somewhere else and it turns into a nightmare deal. Like that is what it is.
Pay your tuition, or what you
pay
called
your
it earlier.
tuition. Yeah, exactly. And maybe that money will come back soon, but I don't know.
Yeah.
You just got to keep going and make more. I had a change in my opinion on investing recently after taking a lot of losses in the last 6 months or so. And I'd heard, and like I had some mentors that say you should probably save $100K before you start investing or trying to get passive income.
Yeah.
I think it's probably more like $250K.
Yeah.
Just because when you're high school or college, like I was right before I was investing, like I'd never had $50,000 in my life. So I couldn't imagine something happening that would cost $50,000. Once you get into this stuff, like it happened, like it could happen a couple times.
And it's like a nauseating, like pit in your stomach where you're like, oh my God.
So I think definitely like if you want to go on more of like an entrepreneurship route, like I have, you should focus a lot on your active income and just making a lot of money. And like, and I never had a savings account, like never really, like I'd make some money and deploy it immediately. Like there were times I would send a wire transfer that left $40 in my bank account.
Yeah.
Cause like that's how things were in 2021 and 2022 and things were great. So now I wish I was more liquid and cash heavy just cause, not as many deals are happening right now. Like things are tougher, interest rates, all that. And that translates to fix and flips going wrong and other deals and whatever investments going bad. So I think if I was just focusing more on like stacking cash, and you got 250K, at the time I was like, that would be ridiculous to keep in your bank account.
Yeah.
But like now it's not. I think a lot of people would agree with me. That's not ridiculous. That seemed ridiculous when interest rates were nothing and you could make 12% return on the most random stuff. But now it's like, okay, I learned that lesson. I'm glad I learned it now. I'm 23 years old. Like I'm gonna have cash reserves. Like no matter what. Like if I want to make an investment, earn some passive income, I need to have like 500K in the bank and then just deploy 250 of it, like have some reserve. Because I never believed in like having a savings account.
Yeah, I got
Until now, I wish I did.
And it's like all of a sudden that whole storm hits, and you're like, "Oh my God, what I would do to have like a
to just
something to
have
fall
some
back
money,
on."
you know?
Oh my God.
Yeah.
I mean, no, I think that's good though. I mean, you have a bunch of people that are online that are always sitting there and they're like, "Oh no," that exact mentality where it's like just dump everything into whatever, and it's like, I don't know. The U.S. has had a really good run for the last decade or so in terms of where it's like it's not been hard, but I mean, it's been relatively easy to make good returns in real estate, at least from like the angle that I've seen, and I've only really been in it for like 4 years. Like just like looking back at a lot of the deals and stuff that you see come through, and it's like, okay, like this property, every single person that's like buying and selling this property, it looks like they're making money on it every single step of the way.
Yeah, it's like
the gravy
happen forever.
The gravy train ends eventually, and when it does, someone gets left holding that bag. But do you think that's something that's going to come to an end relatively soon? Do you think, or how long do you like? Obviously not financial advice, but like what gun to your head?
Just what kind of the opinion I've been hoping for, and what other people think might happen is like during the election, rates historically come down a little bit. So if that happens, like what happened when rates went back up recently, but like when they came down, all the buyers start looking like, okay, there's a lot of people with money on the sidelines. and they're just waiting for rates to be better. So when rates come down, what I would think would happen is more buyers come in and then prices go back up again.
Yeah.
And then may get to a point where it's like, oh, we got to raise rates. So, you know, it's always going to be a balance. And I'm not an economist, so I don't really know what's going to happen. But the one thing is like, there's no shortage of money.
Yeah. We're printing plenty.
They make it out of thin air.
Yeah, literally.
Yeah, like it's not even real.
There was what, like 100 billion that got sent like the other day where they're like, surprise.
Yeah, during the Super Bowl.
Yeah, well, like right after the Super Bowl, everyone's asleep and they're like, surprise, we're sending $100 billion to other countries. Sorry.
Yeah, so that's the thing is like money's not real. Like
no, literally, it's just fake. It's
Yeah.
all made up at this point.
Yeah, and the government, it seems like controls it, but you just need to do what you got to do, make more of it, save it, put it into assets that you're not going to lose, and keep working. I mean,
Yeah, that makes sense. In terms of so you had those couple deals that you ran off, then obviously you got into the duplex. Have you done any of the creative stuff yourself?
Yeah.
And what's that been like?
So the first creative deal I got into was actually the
Creative finance for the
creative
record.
finance. The guy I bought the duplex from,
Okay.
when I was meeting with him, I was like, hey, do you have any more you want to sell? And he's like, I do, but I probably want to keep it for a few more years just for tax purposes. He had just sold a few other duplexes. He sold one to me, and he's getting hit pretty hard with a capital gain tax. So he told me he had 10 units, which was like kind of in the same area. And I brought it to Shane So, and I was like, hey, he's got these 10 units. I want to try to figure out how to do it. Like, what would you say? And he told me almost word for word what to say to the guy, and it worked.
Okay.
I was like, great. Like, you don't want to sell it yet. I don't want to be frank, I don't really want to pay for it yet. He wanted $1 million for 10 units. I would agree it was worth that in that area, but with interest rates and everything, the bank would probably want to see it more at 850. I can get you $1 million if we can do it this way, and it's probably going to help your tax problem.
Yeah.
I'm going to come in and I'm going to do the repairs and increase the income of the property and get it stabilized and bring my financials to the bank. So in 3 to 5 years, like you said, you're ready to sell it. That's when I can cash you out and get you the rest of the $1 million.
But you get control of it prior.
But I get control of it. So we did a seller finance.
Okay.
With no money down and 0% interest.
Really?
And so here's the other piece that I mentioned to him. Like, I was just doing the math. It was bringing in $7,500 a month. Take out taxes, insurance expenses, whatnot. He's probably putting about $4K in his pocket.
Okay.
So I said, I want to give you what you're making. I'll give you $4,000 a month for the property. That's going to allow me to come in, do the repairs, fix it up, stabilize it over the next couple of years, and then it's going to look like a pretty good investment to the bank. Hopefully it's worth more than $1 million, so it'll be really easy to just cash you out and get you the $1 million. So he said, okay, let's do it. So we went to the closing table, put no money down, signed the papers, and then the next month I gave him, after the rent came in, I gave him $4,000 of it.
Yeah.
We had a little bit left over and just started getting to work on it.
What do you think do you think it's a knowledge barrier that people don't do that more? What do you think the limitation is? Because obviously, a ton of people want to be in real estate. A ton of people don't want to put 20% down on an $850,000, set of 10 condos or apartments or whatever the case may be. Like, do you think it's just the knowledge or what?
I think that's definitely part of it. Because if you didn't know you could do that, you're
Yeah.
not going to pitch it. Like, what a lot of people would do is try to bring them down on the price. Say, hey, like, I got to get this $850K. The bank's going to say, you got to put 15, 20, 25% down. And that's how traditionally a lot of the investment deals are done. And you're going to try to figure out that piece. And you're like, maybe you can get creative, like, like the guy did with the other deal. Maybe I'll borrow the down payment from someone else, so I'm not coming out of pocket. And you could do that, but this is a win-win scenario for him. He made more money. We got $1 million instead of $850. It's also helping him with his tax situation right now. Because if I gave him $1 million, he's going to have a huge tax bill.
Yeah, you got.
But I didn't just give him $1 million yet. So we're going to give it to him $4,000 a month. It's easier to write that off on his taxes. With other losses, he's got other investments in businesses.
Okay.
And then it's easier for me because I'm not putting a ton of cash into it up front for a down payment and then putting a ton of cash into it to renovate it. I can just focus on the renovations, and that's kind of your skin in the game. So if someone's like, I could do no down payment, but what's your skin in the game? Like, that's it. Like, this property probably needs 100, 200,000 in repairs. I'm going to have to do that.
Okay.
Yeah.
What's your risk profile when you're getting into a deal at no money down? Is that kind of what you're saying? Just to paint a more complete picture. It's not all just upside. It's not just like, oh yeah, I just gave him no money, like no money up front, $4,000 a month. And then I, go through and fund it. Like when you're looking at it, is there like, are there downsides that you're looking at in terms of like, okay, I'm getting into this thing for no money down, like walk me through that.
We always want to look at like what could go wrong. Like, could everybody move out tomorrow and now there's no income? And then as the big thing that I want to make sure makes sense is the income that it's producing now cover the monthly payment.
Yeah.
Because really there could be other miscellaneous repairs, but the predictable downside is going to be at least $4,000 a month. So if it's bringing in more than that, okay, that checks one box. And then, you know, if it, for whatever reason, we couldn't make the payments to him and we put, you know, $75,000 into renovations, he would get the property back in better condition. Too. So we're incentivized to make sure that we keep paying him. But if we don't, he's going to get the property back in a better condition than how he left it.
Get more
and
than
then
$1
he
million.
and then he can go sell it again, you know? Yeah, there's a few things like that. The big thing I want to look at is how much cash we're going to have to put into it. Like, does a cash on cash return make sense if we have to put money in, and does the monthly payment cover all of the expenses? So like pretty conservative on the underwriting. Like, okay, what's the taxes and insurance going to be? Like, that's pretty easy to predict. You can ask, you can ask the county, you
That's
can ask
straightforward.
the insurance guy what that rate's going to be. And then make sure you've got money set aside for reserves and miscellaneous repairs and all that stuff. And then what's the strategy for the property? Like, how quickly can we increase the income? Are there month-to-month leases that we could bump up a little bit? Is there someone that's planning to move out? We can come in, renovate it, and get it full market rent. So it's honestly easier to do that on like 10 units because there's not that many variables. But if there's like 150 units, you know, it's a little bit of a different game plan, but it's not really that much more work.
Yeah.
Yeah.
It's just a bigger scope of it, I guess. But.
And you're going to be dealing with a different kind of investor. Like, this was just a guy that had some properties. If it's a $15 million thing, it might be one guy, it might be a group, a syndication, it could be a fund, like it could be whoever. So, you know, you're kind of dealing with different people at the different levels, but it's all numbers. You got to make sure the numbers make sense, and then you got to negotiate it correctly.
That 100 to 200 that you put into fixing it up, is that you go out and take a loan out for that, or is that your?
You can get a construction loan. You can do it kind of out of the cash flow. You can use cash that you have. Like, there's a lot of ways to do it.
Okay. Interesting. So that's the first creative one you knocked off, and
that was the first creative one? Yeah.
Is that the way you've done most of the creative finance deals? Has been through the seller finance stuff? Or?
Yeah. Pretty much. We just did one 2 months ago. It was 4 houses here in the Atlanta area.
Okay.
It's kind of the same thing. The guy owned them free and clear. He was selling them, advertised seller finance on Zillow.
Hell yeah.
It like all caps, seller financing, low down payment available. And he was pretty brutal to negotiate with.
Yeah.
To be honest.
What's that mean?
That's why I think nobody else got the deal. But you know, we put $30,000 down on each house.
Okay.
Which on a $450,000 house.
Hell, that's awesome.
Yeah, it's
especially
awesome.
in the Atlanta area.
Yeah. So we got into that, and the payments we negotiated, like we sent him 9 different offers, or maybe 6 different offers over 9 days.
Okay.
And just kind of negotiating terms back and forth. We ended up getting like each house was different, but it was between $1,300 and $1,350 a month, principal only.
Every house was different with $1,300 to $1,350. He said, he's like, I want $1,332 for this one. This one will be $1,347.
Yeah. Well, he did want it to be different so he could know like which payment was coming in.
Okay, that checks out.
Yeah, so that made sense.
Yeah.
Just like kind of easier for him to keep track of. But
principal
it wasn't that. Yeah, principal only. So every month we make a payment, we're paying down that equity. So we did pay top dollar. Like we paid like exactly what they're worth, or maybe even a little more.
Okay.
But we got good terms. So yeah, that's what you can do. And then they'll rent for like $2,400, $2,500 a month.
Hell yeah.
Yeah, and then there's another strategy. What you can do, what we did with one of them is you can sell it on a lease option, which is kind of like a rent to own type thing. Like someone will put a down payment down. So we got all our money back. And then they're going to rent it from us and then buy it after 3 years. So that's the downside, is like you don't get to keep the house forever, but you're kind of helping someone who can't buy a home traditionally right now get into a home.
Yeah.
But they'll kind of take over the repairs and everything. They're going to cash flow us.
Okay.
And then they'll cash us out at the end. But we got all our cash out up front too. So it's a good investment. You know, it's a win-win for everyone involved.
You said the guy was a brutal negotiator. In your eyes, what does a brutal negotiator in real estate look like?
One thing is that he was, in his 80s.
Okay.
Had a very strong accent and potentially a speech impediment.
Okay.
So it's hard to understand.
Okay.
One thing. but he was like very stern. We got hung up on. Like Colin did a lot of the phone calls with him, and Colin got hung up on several times. He got cussed out a few times. Like
nice,
because we were trying to come in, no money down, pay. We were actually trying to give him more monthly, just because we weren't giving him money down. But he's like, no, need 50,000 down on each house. He was very firm on that, and like, okay, we can't really do 50. It's good. They're all going to need some work. They all need to be painted, like all these things. So we got him down to 30, and then had to figure out the monthly part. And he didn't want to do 0% interest. And then we got him to talk to his accountant and to realize how that would actually help him more with his capital gain issue.
Okay.
So then he, came back on the interest, but the payment was higher than what we wanted, so we had to get him down on the payment. Then eventually, we finally agreed on everything, and he needed to close before the end of the year. That was the other thing.
Oh, Jesus
so
Christ.
The initial conversation was December 20th, and we closed December 29th.
Oh, my God.
Yeah.
Oh, so that's where all the phone calls were over the 9-day period. It was like a mad dash.
It was to figure it out.
Had he already gotten title pulled and everything? I mean, like, what was that?
No, we just have a really good attorney.
Okay. Hell yeah.
Yeah.
You want to plug him? If not, I'd get it.
Yeah, John Robbins in Calhoun.
Okay,
yeah,
cool.
For sure.
Like some people are like, no, that's my secret. That's proprietary.
Yeah, no. Well, Shane does a lot of closings with him. Like we're up there pretty frequently.
Hell yeah. Is that, I mean, in terms of the sourcing of those, because I'm assuming there's going to be a question of like, okay, not all of these are just going to be advertised on Zillow. I mean, if you go on Zillow and you search like owner finance, creative finance, seller finance, I mean,
there's some.
You get some of them. I mean, obviously there's going to be.
Everybody's calling them.
Yeah. So is there any way that y'all go out and try and source these or swing people that otherwise wouldn't be interested in owner financing into it? I mean, is there a strategy on that end?
A lot of it right now, what we're doing is coming from other relationships, like other wholesalers who are already out there making the cold calls. They're doing the text blasts, they're doing the mailers, and they get these leads, and maybe they don't quite know how to do it. And they know that we've got the creative finance pretty well figured out.
Okay.
So a lot of leads just come from other people. We'll message people on Facebook. Like for sale by owner is good and bad because you're talking directly with the decision maker, which is great. But a lot of times I don't know what it is like, and you probably know this as a real estate agent, the type of person that doesn't want to work with a real estate agent.
Yeah.
Like there's reasons. I don't really know how to explain it, but
they're a particularly standoffish / overly confident type person, at least in my experience. It's like, I know what my home's worth. I know how to do this. And it's like very much like, F you, I can handle this on my own. And so I would imagine that anything outside of like their realm of expertise challenges that like assertion that in their own head, like I'm the expert. And it's like, I don't understand this. This scares me. Run.
Exactly. Yeah. So I mean, that's something to deal with. But then there's other lead sources, like people who like need to sell. Like there's a million reasons you need to sell your house that have nothing to do with getting the highest price.
Yeah.
So pre-foreclosures are a good lead to kind of get creative. It's like, it really doesn't make sense to pay you what you owe and you're $40,000 behind on payments. Like I can catch you up on payments and give you some money to walk away so you don't get this foreclosure on your record and you can move out of the house and just walk away. Otherwise, you're going to lose the house. It's going to be on your record. You're not going to get any money and you're going to get kicked out. It's going to be terrible.
I was going to say, at least this way you can salvage something.
Yeah. We'll catch you up on payments with our money. Like we're going to do that. And then we'll take over the house. We'll stop the foreclosure. And, if we can, it depends on how much money needs to go into it. But if we can't, give you some money to move and, get a new place and do all that kind of stuff. So that's a creative way. And you can, if you do all the paperwork correctly, you can buy someone's house and keep their mortgage in place. So it's called sub-2, subject to the existing mortgage.
Okay.
So you can do that. You got to make sure everything's right. Like most of the time it makes sense to actually talk to the bank.
Yeah.
You try to do it behind their back, they can call the note due, and then it's like, okay, well, we just took over this $380,000 mortgage, and now they say we got 30 days to pay it.
Or they'll take it back.
I don't know how many days it actually is, but it's like,
I mean, in Georgia,
that's a situation.
I was about to say in Georgia, I think it's 60, 90 days. Like, and that's like after everything. Like they can take your stuff back quick.
Mm-hmm. Yeah. So you just got to make sure you're protected and like talk to someone that knows how to do it all.
Yeah.
But that's a strategy. And then another thing that we're kind of trying out is expired listings.
Yeah.
Because you think about it, in the real estate agent world, that's a huge lead source.
Yeah,
like
100%.
They just fired their real estate agent yesterday. Maybe I can slide in, kind of smooth talk them into listing with me. Imagine if you're the buyer. Like literally call them, hey, I am not a real estate agent. I want to buy your house. Can I meet you today?
Those people get lit up so much from agents. I bet that works real well.
It does.
Because like if you call an expired listing on the agent side after about 9:30 the day after it expired, good luck.
Yeah, because that's what everyone's doing. Because it is a good lead source. Like,
Yeah, it's fantastic.
Someone that clearly wants to sell their house. They had it on the market for however many months, and then it didn't work out. Maybe I can help them. That's a good lead for if you're a real estate agent. But if it's a good lead, everybody's calling them. Yeah. So when you're calling, you say like literally like, "Hey, Mr. Seller, I'm not a real estate agent."
They're like, "Oh, how can I help you?"
Exactly. Yeah, and I got that from Pace Morby. Like I had him on my podcast, and he's like, "Dude, if I wanted to get a deal today, I'd be calling expired listings and tell them, hey, I'm not a real estate agent. I want to buy your house. Can I meet you today?" And then go figure out how you can buy their house.
Okay. What when you say go figure out how you can buy their house, when you guys are looking at this creative side, what are the questions you're asking to try and get an idea, like if they might qualify, if they do qualify, just in any capacity, what the best route is? I mean, you mentioned sub 2, you mentioned seller financing. I know there's a few other things y'all do, but like, what does that whole, I guess, qualification process look like on y'all's end?
Well, we definitely want to know the whole situation, everything that's going on with them, why they're selling, how much do they owe on the house? Like, do they own it free and clear? Is it a rental? Do they live in it? All that stuff. But what we're trying to do is craft like just a couple offers for them. Like every wholesaler's for the most part doing a cash offer. And it's going to be a very low price, like cuts pretty deep so that they can sell it to an investor and make a profit. Like some people that makes sense. Like they need to sell it so bad that they'll take it at a discount. Or, well, let's look at your mortgage. You've got a 3% interest rate. You really need to sell this house for whatever reason. Has anyone ever offered to take over your payments?
Okay.
And then say they've got $100,000 mortgage and the house is worth $350,000. It's like, okay, you've got a good chunk of equity. Can we make you payments towards the equity? Because they're not going to walk away from $150,000 if they don't have to.
Yeah, 100%.
Yeah. So like, can we take over payments on your mortgage and give you some payments towards the equity? So that's a strategy. And then another one is like maybe it's an investor that they kind of need to get rid of the house, but maybe they have a prepayment penalty or for whatever reason they can't really do that kind of stuff. You can master lease the house from like, hey, I'll pay you $800 a month for the house on a lease with the option to buy it at a later date. Like say they've got 2 years on a penalty, like, in the next 3 years, I have the option to buy it at this price.
Okay.
And then you could sell that option. Or you can, put a tenant in there, rent it for $1,400, make a little bit of cash flow, and then cash them out later down the road. Hopefully, it's worth more than what the price you set up front was. Or you could sell that option to another investor, and they can make the cash flow, and you can get a little cash up front, and then they'll buy the house.
Okay, so there's a lot of different ways you guys can structure these to try and get the best outcome for
it. Yeah, it really depends because the situation is going to be different every single time.
Do you see a lot of other people talking about this online, or like what's the general discourse you see around this?
There's a lot now. Pace Morby is huge.
Okay.
Like he's built an amazing brand. He's got a ton of followers, and he has tons of content on this.
Okay.
So you do see it a lot more. Like I posted a house up for rent this morning, and there's a guy messaging me like, hey, would you ever consider selling it with creative finance or sub 2 or seller financing? Like there's people out there trying to figure out how to make it work. I don't know that all of them like really know all the intricacies, and I don't even know how to say that word.
Yeah. Makes two of us.
Yeah. So it's good to have a mentor, someone that's done, like I work with Shane and he's done hundreds and hundreds of these deals. So I can literally just ask him for help on the stuff that I don't know.
Yeah.
But there's more of it. I mean, Pace Morby is really, really popular right now. Like if you're getting into real estate, creative finance, like his face is going to come up anytime you Google it, 100% chance.
Okay.
But are there a ton of people? Like, not a ton.
I gotcha.
But like that was one of the conversation I had with him. He's like, it seems like in our space, because like we do creative, it seems like everybody knows this.
Yeah.
Like everybody knows sub 2, everyone knows Pace Morby. But he's like, I've got 15,000 students in my coaching program. Like, sure, it's a lot of people, but 15,000 people in a country with 300 million, like it's nothing. Yeah.
That's wild. So me and you got plugged in together off TikTok.
Mm-hmm. I wanted to talk about that.
Ye old TikTok. What about it?
So, well, I started vlogging yesterday.
Hell yeah.
And then I uploaded I'm trying to make it super simple for myself, like literally record it and then upload it, like no editing at all.
Yeah.
I don't want to edit it, but I want to do it. So I was talking about today in the car, like on the way over here, like how we met on TikTok and you're doing really good with it and you get a lot of views now, but like it was like when you were just starting. But the reason we met is because you were posting on TikTok.
Yeah.
It didn't matter how many people were watching. It mattered that you were doing it. It was like, I saw your video. You're talking about Atlanta real estate. I live in Atlanta. I do real estate. Commented, hey, like, let's connect. And here we are.
Dude, I've met so many people that I met Shane that way. I met you that way. I met a couple dudes at the gym that I go to that way. I mean, I don't think people understand the scope of it and the real benefit of it. I think a lot of people look at it just strictly from a vanity side of like, oh, well, I got this many views. And it's really cool. Like the dopamine.
Yeah, like you've got some videos that did pretty well now.
Dude, the dopamine, I have one video that has like 2.2 million views. The dopamine of sitting on the elevator at the Grandview, just sitting there refreshing it. I was like, oh my God, this is like Monopoly. Like it's just not real. And you're just sitting there and it's like every single time you refresh, it's like so-and-so and 500 others like this video. I was like, holy shit. Like, this is sick.
The best thing for me is I leave a lot of comments on TikTok videos.
Yeah.
And I had one last night. Like I woke up this morning, it had like 2,600 likes and
oh my God,
30 people replied to it.
Just starting wars in comment sections.
I was just like refreshing and it's like just now someone like so it's pretty cool, but it doesn't provide any value to anybody, which is funny.
Still, that's hilarious.
But yeah, that's the thing. Like I'm kind of telling people about is like, go ahead and start the content. We were talking about my podcast. I'm doing it for 3 years. Like, dude, nobody listens to it.
Yeah.
Like, you go to my YouTube, it's like there's some that have 2 views.
Yeah.
But I've been able to sit down with like people who are way more successful than me, have way more money, and have a lot more influence and a bigger brand. And like, it grows my brand by proximity.
Yeah.
You know, I'm providing value to them through content that they can post to their brand. Like, I get to sit down and have an hour-long conversation with them, just me and them, build that relationship, and that can continue. So there's a lot of merit to it. And then people ask me like, oh, how did you get so-and-so on your podcast? I was like, because I started one and I still do it. And I asked them to be on and, you know, it's worth their time.
You show someone, you're like, hey, look, you show people the consistency and all of a sudden people are a hell of a lot more eager to help you.
Yeah. Or even the fact that you have one.
Yeah.
Like,
they get a chance to go talk about whatever
they do. Are you going to get
do
Grant Cardone on your podcast if you don't have one? No. If you have one, maybe not. But if you don't have one, like it's not happening.
Guaranteed no.
Because if you're not posting content, you're not going to meet people through TikTok that you can do business with.
Yeah. It's a hell of a networking tool when you use it the right way.
Mm.
Do you, assuming, you know, you're on TikTok, you see Atlanta real estate stuff, how do you find most of the advice on TikTok? Do you think that a lot of it is accurate? I mean, I know earlier I kind of like jumped around. I was like, there's a lot of mixing and matching, at least on my perspective. Do you think that a lot of it's good? A lot of it's kind of like iffy? Like, what do you think? Kind of
your stuff?
No. Mine's all atrocious. Don't listen to me. I just mean as a whole, like most of the real estate stuff that pops up on yours, do you find it like in good faith or trustworthy? I mean, because I've seen all sides of it. When you see some stuff where it's like, oh, damn, that's super actionable. That, you know, it actually gives a complete picture of it. I'm not really sure the question I'm trying to get at. I mean,
yeah,
like,
no, I think I know what you're asking. Unfortunately, my For You page is almost all funny stuff.
Damn it, Tim.
But a lot of what I see is most people are trying to teach wholesaling or like Section 8 investing, which I think this stuff works.
Yeah.
But I don't know. Like I really don't see a ton of real estate stuff on. I mean, I don't spend that much time on it either. But yeah, it's all like funny. The most
like
random
watching cat videos and stuff.
Yeah.
Do you have you done any Section 8 stuff?
On accident, like I bought properties that had Section 8 tenants in it, and it was okay. The Chattanooga Housing Authority during COVID stopped working in the office, and at the same time stopped answering the phones. So it was pretty difficult to work with.
Oh, them too?
Yeah. Or like you buy a property and they keep paying the previous owner for up like 6 months. I had that happen.
Oh my God.
But then when they finally correct it and pay you, it was pretty nice to get 6 months of rent in one payment.
Just 6 months backlog.
Yeah, that happened. That happened. Actually happened on that duplex.
Oh, hell yeah.
Yeah.
Well, not great that you don't collect rent for the first 6 months.
Yeah, but I mean, it is it is what it is. Well, so that was pretty cool too. Like, the previous landlord had her rent at like $500 a month, and it was all Section 8. Like she wasn't paying any of it at all. And we asked them if we could increase it to market rent. They increased it to $12 a month. Didn't change her payment. Like the tenant, it changed nothing in her life, and I just made what is it, $700 more a month now?
Yeah, for nothing.
For asking
a question.
Yeah.
Don't tell that to TikTok. They'll tell you that you deserve to be hanged and shot, and also that you're capitalistic scum. And I'm trying to think of some of the other fun ones I've been called.
Yeah, they will. But I mean, market rent is higher than $1,200 there.
Yeah.
But yeah,
hell yeah,
providing safe, affordable housing, like.
You must be the devil.
It did nothing to her.
You must be the devil.
Change her life at all. Like, yeah.
Devil
And I just made more
personified.
money to pay the mortgage because taxes are going up, insurance is going up, interest rates are going up. Like, that's the thing. Part of it.
That's insane to me. What's working with Shane been like?
It's been pretty cool. I've learned so much, like in everything that's happened in my life in the last 6 months that caused me to end up working with Shane.
Unfortunately, that we cannot go into.
Yeah, and eventually we will. But like in the last 6 months, what I've learned, you could not learn in 4 years of college. You could go get your MBA. You could go to Harvard. Like you could go to Wharton. I don't care where you go to school. You're not going to learn about business and life what I learned in the last 6 months.
Okay.
Just by like getting punched in the face, teeth knocked in, like kick while you're down, take the shirt off your back, like kind of stuff. And it wasn't that bad, but
it wasn't great.
Yeah, it was not great.
When the whole thing's over and settled, we'll have another one of these, and you can run through everything.
Yeah, pretty crazy stuff that hurt financially pretty bad. But
I can only imagine.
Yeah, but where was I going with that?
Learning everything in the last 6 months working with Shane.
Oh yeah, like dude, we took a trip to Myrtle Beach to go look at some properties, and we ended up driving. So it was like a 7-hour drive in a Tesla. We had to stop and charge, and like I learned more in 7 hours than I learned about real estate previous to those 7 hours.
Okay,
like in my whole life.
That's wild.
Just about man, just like the negotiation piece. Like it's all people. Like you're just talking to people, like in the way you present it, because now that the creative finance stuff is getting more popular on YouTube, and it's like you can do it with no money, so it attracts a different kind of crowd. Just being real.
Yeah.
Mostly people that don't have money. Like it is what it is. So then you kind of have people that just learned about real estate on YouTube, and they're calling the same brokers that I'm trying to do deals with. And it's like, bro, you just learned about real estate on YouTube last night. And like I appreciate that they're taking action and trying to learn and doing it, but like it's different. So when we're trying to make a win-win, like a legitimate, it's going to have to be creative because interest rates are 8%, and you're asking $3 million more than the bank would think it's worth. Like if we took this deal to the bank, we put 50% down cash, they might still say no.
Yeah.
So it's like we have to do something else. We have to make it more of a creative deal. But it's all the way you frame it, because when you call someone, you're like, hey, would the seller ever consider doing seller finance? They're like, no. And several times we get told no, and then we end up getting the deal just because.
You just find workarounds?
Not workarounds, but it's just like how you present it, make sure that you're credible, you know what you're talking about. The big thing is like the confidence. Okay. Because people have asked me like, well, how do you deal with being 23 and talking to these, brokers on these like big deals or whatever? It's like, no one's ever asked me how old I am. No. Because I know the language of the real estate. I know what I'm talking about. I talk about it confidently. So it's like, it doesn't matter how old I am. No one, like literally I've never been asked.
Yeah. Yeah. You speak intelligently on it.
Yeah. It's like, that's not a barrier, but you should educate yourself so that they're like, what is this kid doing? Like,
Sounds like
I asked him about the NOI and he had to Google what that meant. Or something like that. It was kind of funny. I was at a Grant Cardone real estate conference a couple of years ago. It's like his events are not cheap. Like the entry level tickets are like $1,500. Okay. And then you got to fly to Miami. You got to get a hotel, like all that stuff. So like you got to spend some money on it. And he's talking about multifamily, and he was giving good information. He was like underwriting deals live on stage. Like he called a broker so you could hear how he talked to brokers. Okay. It's pretty cool, like valuable information if you're a beginner. But I watched the guy next to me pull out his phone and Google, what does NOI mean? I'm like, bro, you didn't watch a YouTube video before you came here? Like you probably spent $3,000 or $4,000 to be here, and you like, Jesus. But then again, it's like, he was taking the time to learn.
I was about to say, you got to learn.
He's in the right room.
Got to start.
Yeah. So not to shame him, but it was like, there's a lot of free information out there that like you can educate yourself before you're like having to go drop 5K on a course or 10K or whatever. Like start building the foundation.
And start with a Google.
Yeah. Start building the foundation and learning the language, and then invest in mentors, go deeper, like accelerate the learning curve. It was like, how many years has Grant Cardone been calling brokers? Yeah. And it's like, you got to learn all this stuff. Like we had to pay to be there, but he did it right in front of us. Like we heard exactly like how he talked to him.
The tonality, the phrasing, everything.
Mm-hmm. Like he literally had his email up on the screen, and he's like looking at deals, and he's like deleting emails. Don't want that one. He's like, oh, that one's interesting. Types in the phone number and calls him, leaves him a voicemail,
Damn, that's kind of
Pretty
cool.
Yeah, that's cool.
That's pretty sweet.
Yeah.
You said you a lot of the stuff you got from Shane was a lot of the negotiating side of it. Was there anything
Mm-hmm.
like in particular that stood out in terms of like trying to negotiate these seller finance deals?
I mean, we're not only gonna do like a no money down seller finance thing, so I don't want anyone to think like
I
that's
know
what we're coming at on every deal.
I know. I just think that that's the most interesting. I mean, in terms of like consumer interest, I think that those are a lot more interesting just because to the general population, I think those are more the rarity than the norm as opposed to just like the stereotypical like run out, go get a 20% down payment.
Yeah. So we're just going to look at the deal, like look at the numbers and see what do we think it's worth and then what are they asking and then kind of start there. It's like, okay, like based on these numbers, I think this deal is worth $6 million and they're asking 9.4.
Okay.
So I'm going to go to the broker, the seller, whatever, and say, hey, like, you know, how much wiggle room is there on the price? Because this is what I'm thinking, you know, kind of get to a price that we can agree on. And then it's like, okay, well, we ended up at 7 million and maybe we put it under contract, maybe we don't put it under contract, like whatever.
Yeah.
It works differently in commercial. So maybe you send an LOI and maybe they say, okay, like we can work with that if you change some things. So then like I went to a lender and showed them the deal and said, hey, what do you think about this deal of $7 million? And they're like, well, right now, no.
Gotcha.
And you can take that information and say, hey, like this is what lenders are actually saying. Like I know you have your pro forma, like what you think it's worth, like you did, but you know, you're trying to get the seller the most money. I get that. Like they want to make the most money. We want to get it. Yeah, we want to make the most money.
Yeah.
Like that's the reality of the situation. But here's 2 or 3 ideas I had on how we can make it work at 7 million.
Bringing them
now,
options.
Now, like, you know, if we've already got some agreement on the price and like we know that we're serious, we're legitimate buyers. We're not just out here lowballing and doing stuff we saw on YouTube trying to get a home run deal. It's like, hey, this is the reality. This is what the bank is saying. Like, I know you were trying to do it traditionally. Like, that would be the easiest. But now we've had 3 or 4 conversations. You know, we've got some agreement on the price. We're willing to do it. This is how we'd have to do the deal to make sure like we can fulfill what we promised. Like we promised you 7 million. We're going to have to do it this way to get you 7 million.
Gotcha.
And then they can say yes or no.
Yeah.
But instead of like, okay, I saw this deal on LoopNet. I'm going to send them an LOI with seller financing at 6 million and pay them $8,000 a month. Send. And it's going to come in. They're not going to call you back.
Yeah. They're going to be like, all right, this is going to go pound sand.
Mm-hmm.
Gotcha. You mentioned Cardone earlier. You got to interview his brother.
Yeah.
How's that?
It was fun. It was like the timing of it was kind of crazy. So like I have my assistant helps me with my podcast, all the marketing stuff. And I just gave her a list of people to reach out. Well, actually, just looked at a lot of other podcasts I liked and was like, hey, reach out to everyone that's been on Bradley's podcast or Ryan Pineda's podcast, whatever. Like, you know, this is a very similar thing. So she reached out to him and like, he's like, yeah, I'm down to do it. Let's schedule. And this was before he was really doing podcasts. He'd been on like Bradley's and that was it.
Yeah.
So this was awesome. Like we did it. It was a great conversation, like really cool. Like, you know,
yeah, went well.
Great conversation, went well. And then, you know, recorded it, did the editing. Like a few weeks later, we released the episode. And that same day, he released a podcast with Grant. And everyone's like, I didn't know he had a twin brother. This is crazy. It's going viral. It's getting all these views. Tons of traffic going to his profile, all this stuff. So it was like, and it wasn't that many views, but that's my most viewed podcast ever. And like, I posted a reel and he collaborated on it and it got like 45,000 views and stuff like that. And it's like,
hell yeah.
When you talk about like the TikTok and stuff, it's like we see so often that someone gets like 2 million views or 10 million views, but 45,000 people is a lot of people.
Dude, if like, you took 45,000 people and put them in any football stadium, it's like that's a sizable amount of people, and that's a nothing video on TikTok.
It's a nothing video. But like before that, and it did bring traffic to my page, brought followers and comments and engagement and stuff, but 45,000 people didn't know who I was before that.
Yeah.
Maybe now they don't, but still, like, if people would see that as a small video, is kind of what I'm getting to.
Yeah, I think that that's 100% warped how people view engagement as a whole. Because, I mean, you get 100,000 views. Still a nothing video in the comparison. And that is literally probably the biggest college football stadium. I mean, what, like Penn State holds like 110,000 people? It's like that's that whole stadium filled up with people watching you sitting in the middle.
Yeah.
And that's a nothing video. I mean, 45,000, I mean, that's like 3 or 4 of the... Georgia Tech's right down the road. That's like 3 or 4 of their basketball stadiums.
Yeah.
That's an insane numbers.
Yeah.
And it's just like people are so numb to it all. It's like,
Mm-hmm.
yeah, but it didn't get 17 million. And you're like, yeah, fuck off.
Yeah.
Like,
Well, one thing I was going to say that's really cool from the podcast, he's really into Bitcoin and cryptocurrency. And I don't remember the numbers, but basically what he was showing to me that really changed my perspective is like, there's however many millionaires in the world. Like, let's just say there's like 30 million millionaires in the world.
Yeah.
And there's like 20 million Bitcoin. I'm messing up these numbers for sure.
Yeah,
like,
I know what you're talking about.
Like, if Bitcoin's gone up now, at the time it was like 30,000.
Yeah.
Like if you're a millionaire, you could afford to buy one Bitcoin, but there's not enough Bitcoin in existence for every millionaire to buy one.
Yeah.
So like once it becomes a thing, everybody can't even have one Bitcoin.
That
right
makes you start stacking sats.
Yeah, exactly.
You're like, damn, I better buy some.
Yeah, so it's like, I wish I knew the numbers, but like right now, every millionaire on the planet could afford one Bitcoin, but there's not enough Bitcoin for all of them to buy it. So once it gets to a certain point, that's why he thinks it's going to shoot through the roof.
I think total supply at the end of Bitcoin mining will be like 21 million.
It sounds about right.
But then there's also something to the effect of like 5 million that have already been lost, like not recoverable because people put them on cold wallets storage, and then they lose the keys and whatever. So it's like that already pulls off 4 or 5. And then from that, I mean, there's still another, I think, couple million that they have to mine. So, I mean, spitballing, just call it what, 15 million Bitcoin.
Yeah.
I forget how many millionaires, but yeah, that'll be a fun day.
Yeah. So, I mean, that was really cool. Like, it was a very entertaining conversation. I had another meeting to go to. We ran over, like we went for an hour and a half talking about Bitcoin and real estate. And we may do another video. He's like, I want to do a video with you about how Bitcoin and real estate are the same thing.
Hell yeah.
Yeah.
Okay.
So we'll see.
Who else? Can't speak. Who else have you had on the podcast that's been like a really like a perspective shifting conversation?
Pace Morby helped me a lot, and that was the most recent episode I recorded because we were about to do a challenge that I didn't know.
I wanted to talk to you about
that. He just did. Yeah.
Okay.
So the challenge we did, 2 weeks ago on Monday, we put a bunch of random cities on a wheel and spun it, and I got Orlando.
Okay.
And I had to fly to Orlando. I had 7 days to get a real estate deal with none of my own money and no connections. And I don't really know the market either.
That's like, what is it, like Undercover Billionaire or
like
something like that?
Billionaire.
Yeah. Okay.
Yeah.
Hell yeah.
So I was talking to Pace. I wanted to come to him for advice on that. And he had just done a video. I don't think it's come out yet, but he had just done the same thing. He did it in 5 hours. He like took a bus to a park bench, didn't have his phone, no money, and walked to a title company.
Okay.
Asked them if they have data. And he's like, maybe it helped that he was Pace Morby walking into a title company, but asked if they have data, do they have a room he could use and a phone he could borrow, and he was able to get expired listings from that day, and did exactly what he told us. Hey, this is Pace. I'm not a real estate agent. I want to buy your house. Can I come meet you? So he made calls for an hour, and a guy said yes, and he walked. I think it was 2 or 3 hours to the guy's house, and then got a contract.
That's got to be a hell of a video.
Yeah. So a lot cooler than mine. It took me 5 days.
Still, if you tell most people to get a deal under contract in 5 days, they go, I have no idea where to start. Even people that have been watching a bunch of YouTube content, at least seems like to me.
So what I did, I'm big on the networking and like collaborating with other people. So as soon as I knew it was Orlando, like on the way to the airport, I'm joining Facebook groups.
Okay.
Orlando real estate investors, Central Florida wholesaler, all this stuff. And I was posting. So I had an idea. I was going to host a meetup in Orlando.
Hell yeah.
I thought that'd be pretty baller, but there ended up being a lot happening that week. And with running around and working and trying to get deals, like we ended up going to 2 meetups, which was helpful, but I didn't host one, unfortunately.
So the deal that you got under contract in Orlando, walk me through it. So at least however much you want to.
Posting in those groups, and there's a guy, Brandon. Shout out to Brandon. He's like, yeah, let's connect. Let's meet up. We'd love to talk. So we met up for breakfast like the next day or maybe the second day. And I guess he didn't fully understand all the creative stuff. He was a wholesaler, just doing cash offers on everything. Yeah. And he's like, man, that just creates a lot of opportunity. Like I have all these leads I've been following up with for 18 months and they're, they have some motivation to sell, but the cash offer just doesn't work. So we sat there for like 4 hours calling his leads, and he's like, hey, I'm working with this guy, Tim. We could probably get you a little more money. I know you didn't like our offer. Can we meet? And there was guy that had a house in Deltona, which is right next to Sanford, which is where I was born. I really wanted to get a deal in Sanford because I thought that'd be really cool. And
Yeah.
I think it counts because it's like 10 minutes.
That's close enough.
Yeah. Let me think what happened next. So I just went to go meet him and kind of walk through the house, like right there, directed with the seller. And Shane teaches like do it in person. Like,
Okay.
You can do a lot of negotiation better in person. So that I start, kind of pitching the creative finance. I'm like, I know you got a cash offer, like for whatever reason that didn't work. Like we could pay you a little bit more. If we give you monthly payments, we'd take over your mortgage. He had a little bit of a mortgage balance, and he really wanted the cash so he could pay off his other house.
Okay.
Okay. I'm like, what do you really need for it? And he's like, well, I can't do anything less than 190. And that's what the cash offer was. I was like, oh, we'll do 190. Like, I got a contract in the car, and like he signed it on the hood of the car, and then we got it 190, and then we sold the house for 205.
Hell yeah.
To an investor. Yeah.
Try and flip it, made 15.
Yeah, just made quick 15. I wish I got a creative deal, but it was still like 5 days. Yeah, I mean,
15 grand, 15 grand.
Right. So that's how I did it. And then there was a few others that like some more deals might come out of it. And Colin did the same thing in Tampa.
Okay.
And I think some deals are going to come out of his too. But there was a seller financing deal in Sanford that kind of same thing. Like tried to pitch seller financing. We played good cop, bad cop, me and Brandon.
Okay.
So he came in like no money down, like here's the price, and we'll give you like $670 a month.
Okay.
The house was rented for $1,300. The guy's like, no, I'm not going to do that. And he's like, okay. Needed a down payment, like needed more money. I'm like, okay, we'll give you $5,125 down.
Okay.
A random number I came up with.
Nice.
He's like, and $700 a month. The guy's like, well, I'm renting it for $1,300. Why would I do that deal? So I call him like, hey, totally get it. Like we're just honestly just guessing. Like we were trying to figure out like, take out the taxes, insurance expenses and everything. Like, what is he making? Like, let's say it's $800. Like, if I gave you $800 a month, like, yeah, you bring in $1,300 in rent, but you got expenses. Like, can I give you $800 a month for the house?
Free and clear, yeah.
And he said, send me an offer. So I wrote the contract. It was like $5,125 down and $800 a month principal only for 30 years. Well, until paid off, it was like 27 years or something.
Okay.
He didn't sign it though. It was a good phone call. We got it on camera, so it'll probably be in the video, but he has not signed. But he did verbally say, like, I like that. Send it to me. So we just got to follow up. I think we might get it, but it just didn't happen while I was there in Orlando.
That's cool. That's got to be probably a little bit of a rush chasing deals like that. You're like, all right, this is fun.
Yeah.
So how many of y'all spun the wheel?
It was just two. Just me and Colin. So Colin
cool.
got Tampa, went down there, and then I got Orlando.
Okay.
Yeah.
Dude, still, that's badass.
Yeah.
I'm trying to think. There was something I wanted to ask you about that we were sitting there. It was right before talking about the challenge, about their podcast.
Mm-hmm. You asked like, I guess the guests that.
Oh yeah. Like the perspective shifts that you've had from being on the podcast, just like through the people. I know you said there's been a couple.
Dude, every podcast I do, I'm like, this is the best podcast I've ever done.
Really?
Like almost every single time.
Okay.
So the last one I did was Pace Morby, so that's my opinion.
Okay,
but, I mean,
that's the most
like
recent
there's a couple of years ago I did like Scott Trench. He's the CEO of Bigger Pockets. I don't know if he still is. He was back then. Like we had a bunch of just different, very interesting, very insightful, wealthy people.
That's sweet.
That I've interviewed, and every single time, like there's some takeaway from it.
That's badass. I'm gonna shift gears 100%. I said you were looking jacked.
Yeah.
What are we doing? What are we doing?
Push pull legs, no days off.
No days off.
And I've been bulking.
Bro split on steroids.
Yeah.
Well, not on steroids, but
no, not on steroids.
Yet.
Yeah.
Wait till the dark side gets
and
you.
eating a lot was like the big thing. So at Thanksgiving I was 175 pounds.
Okay.
And I weigh 190 now, a little over 190.
When are you gonna come grapple?
Come grapple. I've looked into some classes. Jiu-Jitsu, yeah. I've looked into some classes. I don't want to get injured.
You won't get injured. You'll get a little injured.
Yeah,
if you're smart, you won't get that injured.
Yeah.
Don't be an idiot and you won't get hurt. Most of the time people get hurt because they're morons and they don't want to tap. They want to protect their ego. And they're like, no, I'm not going to tap. Crack.
Yeah.
Yeah. That's how you wind up screaming in agony.
Okay. Well, I know a lot of people really like jiu-jitsu, and you can do it for a long time. What I've heard, like,
Yeah, and you don't get as much of the head trauma unless you're Dan. Shout out to Dan. I have a friend,
Yeah.
Dan, that gets concussions like crazy. I don't know. He just like
Yeah.
has some knack for it.
Do other martial arts previously?
No, I don't think so. I think you start off with Jiu-Jitsu.
Oh.
Most of the other ones, you just get punched in the face and stuff.
Right.
Like Muay Thai, you're getting kicked in the head. Like,
Yeah, that makes sense.
I don't have enough brain cells to lose lose anymore. You know, it's like we're already toting the line. So
Yeah.
but
But no, I just been eating a lot. Like you gotta, if you're not gaining weight, you gotta track calories. Or if
Hell
you want to lose weight and you're not losing weight, you gotta track calories. Like it's like the dumbest thing. Like people are like, oh, I just can't lose weight or I just can't gain weight. And like, are you eating more calories than you burn?
thermodynamics has not changed.
Like that's kind of how it works. And then like eating more protein and stuff like affects your body composition. Like kind of been dirty bulking, like just getting calories at all costs.
You're like Raising Cane's. I
Yeah.
think, yes.
So my body fat percentage has gone up, you know, as well as my weight, but
Yeah.
muscle mass for sure.
Dude, who cares? Just get jacked.
Yeah, I'm trying to get to 205 and then I'll cut
Good
back down.
God.
Yeah.
Be a beefy man
So
at
I
205.
got 15 more pounds to go.
Oh my Christ.
Yeah.
That's a big bulk. That's a quick too from Thanksgiving.
Yeah, but once I hit 190 though, I've been 190 for 3 weeks. So it kind of hit a wall.
Just take the
And the challenge didn't help. I lost weight on the challenge. Like
oh yeah.
I was like up till 2 a.m. working, like getting up at 6 a.m. working, and like didn't go to the gym every day on the challenge, and like would have like go to bed with a headache because
not drinking water. You're sitting
I
there
drank
grinding
6
away.
Red Bulls and like
Well-
slept 4 hours. But yeah, that's what you do for the challenge.
Therefore, abuse stimulants. In conclusion, if you abuse enough
Yeah.
stimulants, you will get real estate deals. Is that?
Yeah,
Are you co-signing
and a
that?
pretty bad headache.
Well, how bad do you want it?
Dude, but once I got that contract signed, it was on Saturday, and I slept until like 9 a.m. the next day.
Hell yeah.
And then, so Sunday, we were in Orlando. It was the Pro Bowl.
Okay.
So we took Brandon, who helped us out with the deal, to the Pro Bowl, like kind of as a thank you.
Okay.
Pretty cool. And
That's
then
sweet.
I was like, I was still working on other deals, but I was not working as hard.
Yeah.
Once I finally got one.
All right, got that one under.
Yeah. Like,
So-
we're going pretty hard before that.
You said you want to do a meetup down there, but you do meetups all around Atlanta though. Like
Mhm.
you've done a number of meetups here. You've done a number of meetups in Chattanooga. Like what's the makeup of those? It's just all real estate investors.
Yeah, mostly real estate investors, the one we do in Atlanta. I went to a few that were just like, okay. Like I was kind of talking about some of the stuff I've done in real estate, and people's jaws would drop. And it was like,
Yeah.
like previously, like the biggest guy in the room had done 4 house hacks. I'm like, that's cool. That's good for
Yeah, that's sick.
beginners. But it was like, I didn't feel like I was going to grow there. So like, I know a lot of people that are actually doing way bigger stuff than I am. I think I could get them together to once a month to just hang out and talk and not try to sell a course or anything.
Not be like, no, pay for me for mentorship.
Right.
Yeah.
So I just started one, and like the first one, I think we had 50 or 60 people show up.
That's a
Which
big
was cool.
turnout.
The one that's going to be February 27th.
I was gonna say plug it. Plug this.
Yeah, so it's going to be at Dr. Scofflaw's at the Works.
Oh hell yeah.
We may outgrow it because a lot of people have RSVP'd.
Yeah.
Yeah, more people have RSVP'd than like our record attendance ever. So,
How many
but
is
we
that?
have a guest speaker.
Oh, the guy
Yeah,
from
so Christian Osgood.
Yeah,
is coming to
okay.
speak. He's done hundreds of units with seller financing. He bought a resort with seller financing. Like, pretty cool. And we got a sponsor. So I Fund Cities is sponsoring it. Shout out to them.
Okay. I was gonna say
They,
plug everything, dude.
Yeah. I mean, they help people out with fix and flip, construction loans, investment loans, all kinds of stuff like that. And I've known a lot of the guys there for a few years now. And they
Okay.
just sent a guy to the Atlanta market to kind of meet people. I was like, hey, I like you guys. You want to get in front of more investors? Like, we want to bring in speakers, and sometimes we got to fly them in, like get them a hotel and stuff. If you'll pay
Yeah.
for that, like you can be our sponsor.
Hell yeah.
Mm.
Dude, that's sick. I mean, this will come out probably. Yeah, this will come out like right before, like the week right
Cool.
before. So I mean, hopefully, I'll try and get this like chopped up so that it's good to go like that week, and then you can plug it on your
Yeah.
Instagram.
We
But,
get 2 more people there.
Yeah, exactly. We have room for 2 more.
Yeah.
But
I don't know. So Colin told me like, hey, have you put the event on LinkedIn? Like I don't use LinkedIn.
No.
So I put it as an event on LinkedIn. I just invited everybody in my connections list that was like Atlanta real estate or whatever, and like 70 people have RSVP'd from that.
hell yeah,
We've never even had 70 people show up to our event. So
dude, I think the stuff y'all are doing is cool as hell.
yeah,
I think it's
Thank
awesome.
you.
But we should probably get out of here. We've been doing this
should.
for about an hour and 40 minutes. So
yeah,
it's been fun. Thank you, Tim Stone, student of the game podcast,
it is.
Atlanta real estate meetups. plug whatever your Instagram, all that fun stuff.
Yeah, Instagram. I'm Tim Stone. The letters IMTIMSTONE.
Very nice.
Every time I say it, it doesn't help. People still spell it wrong, but at Tim Stone is taken. So
you should fight that guy. You should come learn to grapple, then fight that guy.
Yeah.
Solve your problems with violence, Tim.
There's a good chance I weigh more than him.
See, what else are we doing other than just getting strong and bullying people on the internet at the end of the day? So, sweet. Thank you,
Thanks.
sir. I appreciate you.
Appreciate it.
Shane, you're next.